Good afternoon. Thank you very much for coming to the interim results announcement for Link Real Estate Investment Trust for the 6 months ended September 30th, 2018. On stage are our CEO, Mr. George Hong Choi, our COO, Mr. Andy Zhang, and also our CFO, Mr. Kok Seng Ng. And I'll now pass the stage to George.
Thank you. Good afternoon, everyone, and welcome to Link's interim result announcement for 2018-19. I'm pleased to have Andy and KS with me on the stage here today.
Yes, thank you, George, and Andy and KS. Anyone with questions, please raise your hand, and also please let us know which organization you're representing. Thank you. Ken from Citi.
Hi, it's Ken, Citi. 2 questions. The first question regarding your share buyback. You have acquired 40 million, so basically regarding your budget, you still have 40 million left. If you have acquired something, will you still continue to go for this 40 million budget? This is the first question. The second is regarding the kind of the portfolio review. Can you update us if you want to acquire in China, what is the threshold, i.e. the acquisition cap rate that you are looking for in China? On the other hand, if you are going to sell something, what is your exit cap rate in Hong Kong?
Thanks for the question, Ken. I think so far we remain committed to fulfill the buyback that we announced. So you are right, we have bought back 30.9, outstanding 2.112 billion. We still have about another 40.5 million units to go, and we will execute as and when the window opens.
With regard to the portfolio review, I think if we do it right, then hopefully we will be able to exit at a lower cap rate than what we're going to buy at. And even if you see transaction where we might go in a bit more aggressively, hopefully we are looking at assets where the growth potential will be higher than those that we dispose of. The asset that we dispose of, I think, will still be attractive to certain investors, but we are looking at something that hopefully have an even steeper growth trajectory when we consider them.
In the front, second row.
Hi, Akrab Choi from Merrill Lynch. George, you mentioned, I think, some of the challenges that Link could potentially face. Just wondering, have you seen sort of any changes in momentum, either in retail sales or rental reversions in the last few months? And then second, in terms of sort of asking prices in China, have you seen any changes as well? Hopefully have come down, but just wondering whether you have seen any changes in terms of sentiment there.
We have disclosed the retail sales numbers, still fairly robust. We just think that the sentiment might be a bit more challenging if the trade war happens. I think from the discussion that I personally have with a lot of people, the 10% tariff hasn't really affected a lot of people. The depreciation have offset that, but the 25% could have impact on the Chinese economy and Hong Kong economy, indirectly affecting sentiment and retail. Property market, I don't have a crystal ball about the residential property market, but that normally would have some impact on consumer sentiment. So we're just being cautious, but so far the result has been encouraging. In China, we are seeing more deals. I don't think price have come, certainly asking price hasn't come down that much, but we're seeing more deals. I think as the financing situation become more challenging for some of the local players, maybe there will be more opportunity for us to strike the right price.
We have one from the webcast. Could you provide a guidance in terms of acquiring and divesting portfolio in the next 1 or 2 years?
We're working very hard. We are looking at a lot of opportunities in the 4 or 5 cities. We're working extremely hard to try and go through both acquisitions and disposals. Just nothing to really talk about today. We're not quite ready on any of the transactions.
Thanks. Justin Cole, Goldman. So I think earlier you raised the guidance for the potential allocation for your assets in China. So with current sentiment on the volatility of renminbi, I guess in the future, how are you going to look at this risk in terms of your balance sheet on that? Would you be raising more renminbi debt as a matching on that? Because I guess for most of the Hong Kong companies in the last few years, when they go into China, they effectively use low cost of debt in Hong Kong and then to buy things in China. Would you do something else differently in this, or how do you see this? Thanks.
The good thing about real estate is that it's very location specific. So if we manage to find good assets in the right location, I think the growth potential will still be pretty good. What that means is that hopefully we can produce enough income to overcome the challenge of renminbi. We will look at some form of hedging, whether it's renminbi loans or a lot of bankers here, so we will be looking at some renminbi loans. The degree of how much we hedge, I think, is something that we've been debating ourselves. We believe in the China retail business long term. Balance sheet hedging doesn't make a lot of sense if we're not looking at short-term exit. If we believe that renminbi will drop in the long term, we shouldn't invest in the first place. But obviously it will affect, for example, how P&L is translated, and so this is something that we've been discussing a lot, both at the management, among the management team, and also with the board. But I think a simple answer would be: we see more volatility with renminbi than before. It's not a one-way movement, but it's also not one way. It's not one way up, but again, it's also not one way down. So we'll be careful to manage it. I think when there's deals, we'll talk more about the specific structuring.
We have another question from the webcast. After AGM in July expanded the investment scope to include relevant investments, any plan to allocate capital to offset the rise in interest rates through relevant investments?
I don't think we are engaged to play treasury market. We are a real estate investor and manager. The room to do relevant investment is there. Since the AGM, we have put forward a sort of strategy and framework to the investment committee, a risk management and control framework to the audit and risk management committee. Those have all been approved. So straightly speaking, today we are ready to do some transactions. I'm glad that we have not, because given the interest rate environment recently, if we have bought any sort of slightly longer dated instruments, we probably have lost money. And if I tell you that if we have done so and short-term lost money and mark-to-market, and then tell you we're going to just hold it to maturity, which some people do, I don't think it's a very wise thing for us to do. So we'll be very cautious how we exercise that flexibility. It's there. I think it's just not the right opportunity to do it.
Do we have any further questions from the floor? Okay, if not...
Yeah, I think just to sum up, we're very happy with the development in China so far, with the assets that we have acquired. We see more opportunities there. Hong Kong remains the core market for us. We'll continue to look at opportunities in Hong Kong. We believe that we can continue to build on the trajectory that we have so far and deliver pretty solid return for the next few years. Thank you.
Thank you very much for coming. And if you have any questions, myself, Eric, Luna, and the IR team are always here. Thank you.